I was at the car dealer the other day and I was thinking, why don't I just purchase a car with a credit card? I'd get so many points out of it that I'd definitely be able to take any type of trip for free. They just didn't want to accept my card. Darn. Welcome back to the channel. I'm Jacob Fisher, and today we're talking about things you should not purchase with a credit card or things you just should not put on a credit card. Also, I have to confess, that intro was a lie. I haven't left my house in over a week. Work from home life. Am I right? No? Okay, well, make sure you give that like button a little tap and then let's get into it. Firstly, while researching this topic, I found something that I thought was totally wrong and something you should put on a credit card that they said you should not put on a credit card. It was a vacation. Now I get it. You shouldn't put a super expensive vacation on your credit card if you don't have the money to pay for it. But you should absolutely put your vacation spend on your credit card because you get the most points on things like that. American Express Platinum gives you 5x points on airfare and hotels, while the Chase Sapphire Reserves gives you 3x on travel and dining. Those are all things you would use and rack up a ton of points with if you put that spending on a credit card. So why would they tell you not to put your travel spending on a credit card if that's the number one way to rack up points, besides a welcome bonus, and get that free travel? I digress though, and let's get into things that you should not put on a credit card. Stocks are at the top of the list for things you should not put on a credit card. The fees associated with this can range from 2.5% depending on the merchant to up to 25% through a cash advance fee on your credit card. It just depends kind of how the brokerage does it. That means to actually make money using this style of investment, you'd have to be up over 25% by the time you paid off your credit card. Otherwise, you would get charged that interest rate on the credit card. And that's just at break even. If you continue to not pay off your credit card because you were hoping to get some sort of huge stock win, you'd be down even more money just from interest fees stacking on top alone. Transferring money is free in most cases, and if you think buying Tesla calls are gonna help you out, well, you might be right and you might be able to make 25% on them. But I joke, it's super easy to lose money on options. Definitely do not use a credit card to buy options. That's just a one-way ticket to owing back your credit card company a lot of money. A credit card leverages money, an option leverages money. That's just too much leverage for one person to handle. Not many brokers even offer you the ability to purchase a stock with a credit card. And if they do, you probably shouldn't be using them because they are some sort of sketchy broker that takes credit cards. I mean, the gains you would need to get through buying a stock with a credit card are just obscene, and the points you get on that wouldn't even be worth it to make up that 25%. No card gives you 25% cash back, no matter how hard you try. The next one is a gray area. It's rent. Now, rent is something that you can put on a credit card, obviously if you make enough to pay the rent, and if the merchant fee is pretty low, around 1%. While you are paying 1% more in rent, you should have an income that should allow you to pay that 1% more in rent just by being able to afford it overall. Now, that I say that 1% number because if you only got charged 1%, you would be able to greatly overachieve that 1% in rewards points that you could get back through paying rent. If you made 1.5% back in paying rent, like using the Chase Freedom Unlimited and then transferred over to a Chase Sapphire Reserve, you technically at the minimum be making 2.25% cash back, directly cash, because Chase Sapphire Reserve allows you to redeem your points for 1.5 cents more through the travel portal. Now, you can always transfer your points to other partners like Hyatt, where you can probably get at least 3 cents back, making your total cash value about 4.5% cash back. And you've only been charged 1 extra percent while you're making an extra 3.5% back. Really, that's a case where it'd be an okay scenario to pay your rent with a credit card. However, if your fee is 2.5% and you only get 2% cash back on like the City Double Cash, then in that scenario, it's just not worth it to pay that extra 2.5% just to get cash back, because really you'd be paying 0.5% more overall. It just comes down to how effectively you can use your points and how much you get back initially when using a credit card, which is why it's sort of a gray area when it comes to paying rent on a credit card or not on a credit card. Moving on, loan payments are something you should never pay on a credit card. Mortgage, tuition, medical bills should all be avoided with paying on a credit card. That just wouldn't be the best plan to do with your credit card. Sometimes all of these charges fall in a line of cash advances, and that would potentially charge you an extra 25% on your purchase of the loan, especially because mortgage rates are at all-time lows, and using a credit card that has a 20% interest rate just would not be worth it overall on paying a mortgage. Another thing to kind of avoid with a credit card is using that cash advance feature. While it might be nice to get an immediate sum of cash, the interest rates on that are just insane compared to what you can get through another loan. Obviously, don't go for any predatory loan companies, but maybe through your bank, they could offer you a loan for 3% depending on what you need it for. Taxes. This one signals a red flag to some people if you're trying to pay your taxes with a credit card. If you're paying taxes with a credit card, people may try to figure out why you're not using a bank account instead. The IRS, that is. I know on the IRS website there's a fee for paying your taxes. It's around 2%, I think, for a credit card. Now, of course, you can do this if, let's say, you run a small business and want to put your taxes on a credit card and have the money to pay it off right away. That's just kind of the important thing here. You could put things on a credit card if you have the money to pay it off right away along with the fee, and you're going to get more back in rewards points at the end of the day. Finally, let's get into automobiles, because this is something you definitely should not be putting the entire purchase on your credit card, except under most circumstances. I say most, and we'll get into that reason in just a little bit. There's a great example. If you're putting the entire purchase of your car on your credit card, you're gonna be paying an insane amount of interest right away. Not to mention, a lot of car dealers are just not gonna let you pay the entire thing with a credit card, and you would need to have a pretty high limit depending on the car you buy. I mean, it doesn't make sense to pay 20% interest on a credit card over the years if you're actually trying to make monthly payments on a car when you can get a much cheaper rate, probably through the dealer themselves. However, if you had $50,000 in the bank and wanted to do what this guy did and buy a Tesla with a credit card, then I guess go ahead and do it, because you can rack up 50,000 points just from that. If you have the Freedom Unlimited, though, it would be 75,000 points. It's still a very big purchase to try to put on a credit card. And in fact, the credit card company didn't actually accept this. He had to use a service card plastic, which charges another fee on top of that. I guess he just really wanted the points out of this purchase and had the money in the bank and could pay it off right away, which is what he did. You know, it's not the dumbest decision ever, but it's not the best decision you can make. I think the general rule of thumb with credit cards is that if you have the cash in the bank, you can use the credit card to make the purchase and then pay it off and collect those reward points. But if you don't have the cash in the bank, then it's probably not worth it to spend the money on the credit card and then have to pay the interest rates of the credit card every month. Also, if the fee is greater than the potential rewards you can get out of the card, then don't do it. It wouldn't be worth it in that case either. Let me know down in the comments what you think of these ideas. I'd love to hear from you. Now, I upload videos on Monday, Wednesday, and Friday on travel and finance, so if that sounds like something interesting to you, wow, that was hard to get out. Subscribe down below. Thank you so much for watching, and until next time.